Kia ora everyone, Nathan here. Welcome to June's monthly mortgage update. Lots been going on in the news everywhere on finance and property side of things. Firstly, the LVR changes that are happening on 1st of July. The Reserve Bank has made this decision to just ease up the restrictions. Property investors will be able to buy investment properties with less deposit now, and first-home buyers will be able to buy their first home with as little as 5% deposit, and their book is now going to open up a wee bit. So banks will be willing to lend more to first-home buyers with a lower deposit. First-home buyers grant, that's all gone. Look, we knew this is coming. We have, let's say, 10 clients first-home buyers application in a week. We only have hardly one person applying for a home start grant. So I don't think so that's going to make any impact in the property market, because nobody was actually just using that grant. That grant was heavily restricted with income and price cap, and I just don't think so that's going to make any difference. The third is the Bright Line. Now, this is a biggie. From 2nd of July, if you purchase any existing or brand new property as a rental, the Bright Line is only for 2 years. It used to be 10 years for older properties and 5 years for new homes. My personal prediction is first-time property investors, they're going to come to the market fast, and that's directly driven by a 2 years Bright Line. So imagine buying a property and then selling after 2 years, there's no tax on it. That's quite generous of the government what they've done, and it will be quite interesting to see how much it will impact the property market, especially for first-time buyers. Because first-time buyers will be now directly competing with those property investors. Interest rates are still pretty high, so I don't think so investors will jump on board straight away. Cost of living is already high. People are not thriving. They're sort of in a bit of a survival mode. So I don't think so investors will jump straight away. Imagine if you're buying something for $650, $700 by using your equity, the rent might be $650, but your mortgage payments will be $950 a week, plus your rates and insurance. No one's got spare $400, $500 cash to top up and buy a rental. It's just not that exciting at this stage. The fourth change is the OCR. As expected, it's on hold. My personal prediction is we will see the reduction in OCR hopefully by November, if not earlier. You'll see in the media there's lots of pressure on Reserve Bank to lower the OCR sooner rather than later. Canada is the first country in OECD to lower their OCR by 0.25 basis, so hopefully we'll see some sort of reduction start coming over the next few months. Our advice to our clients is just fix it for 1 year. You don't want to fix for any more than 1 year, because it is likely the rates will start coming down in November this year. You would have heard on the news, DTIs are all confirmed. Yes, they are. Reality is, I don't think so that's going to make much difference for people looking to buy owner-occupied properties, because banks were preparing for DTIs behind the scenes over the last 12 months. And a couple of banks, they were actually using DTIs, over the last couple of years now. So don't think so there'll be any changes in serviceability for people looking at buying their own home. It will impact people looking at buying more and more rentals. DTIs are pretty straightforward. It will impact property investors with more rentals, sort of 4, 5, 6 plus rentals. But if you're looking at buying your first rental or second property, third property, as long as your servicing is there, don't think so that's going to be any major impact. Lots going on in the market. Look, we are quite busy in our office helping clients upgrade their properties and first-time buyers. We are doing heaps of EV loans that are still available at 1% or interest-free with some banks, and some just buying shareholding, business purchases, franchises. Investment properties are still 5% of what we're doing. So I look forward to catching up with you in July. So until then, keep nice and warm, keep safe. If you have any questions, please feel free to reach out to the team at hello@nzmortgages.co.nz, or give us a call 7 days a week on 0800 100 300. Thanks very much.